Hello, my name is Steve Bigelow with the Candlestick Forum. We've got that dichotomy in the markets right now where it's still in a downtrend, but it may be reversing. Today, we saw a bullish Harami in the Dow with stochastics in the oversold area. So we need to see confirmation tomorrow to tell us the bulls have taken control. However, the control may be to the point where it still needs to come up to the T line and see whether they can get through the T line. But evidence of being in the oversold area, doing a big bullish Harami right on a major support level would imply that the bulls are starting to step in. And that'll still be a function of how do they open the market tomorrow. Obviously, if they open lower and trade lower, they haven't reversed yet. Now, notice what has happened over here in the Nasdaq. There's not a reversal signal here. Stochastics are getting down toward the oversold area. So even though there's buying here at the 50, it's not a reversal signal. Notice that the downtrend remains in progress. Even though there was a strong bullish signal last week, they couldn't close it above the T line. The T line and the candlestick signals are your most important factor as far as analyzing what the overall investor sentiment is in the markets. So this type of movement in a downtrend and maybe seeing buy signals still allows for the short positions to continue to work. We recommended AFRM because of the bearish dark cloud failure right at the 50, closed below the T line. This is the blue ice failure, described by my late friend Dave Elliott of Wall Street Teachers. They fell through the ice. They came back up to try to find the hole that they fell through. They couldn't find it. They drowned, so they're going to the bottom of the pond. Or basically a bearish J-hook pattern. Same thing on charts like Twitter. They opened positive on this day, but closed back below the T line. You can see that even though the market was up 600 and some odd points today, the Dow, the sell signals still work, or the downtrend still work in stocks that can't get up above the T line. This is what we're going to be concentrating on this weekend for a mini spotlight training on day trades or swing trade entries. NVAX, you can see the huge reversal, a big bearish left-right combo after the gap up in the overbought condition. It's tried to come back up, but here was the alert. Notice this green candle, bullish candle. Then they gapped it down, opened at the previous day's open and traded lower. That was the alert that if they open this lower the next day, which they did today, you could be shorting immediately because there was your bearish flutter kicker signal, an extremely high probability entry for both a day trade or a swing trade setup. So when we can combine the information we know should be happening or what a signal setup could be, that makes entering a short position right here an extremely high probability trade. Same scenario on the long side. We recommended CHGG on the basis that if it opened positive today, notice what it would be doing. You had your fry pan bottom, you had your kind of a little bullish flutter kicker up through the T line, and then today when it opened above the previous day's open and traded positive, there's your trend kicker signal. Also an extremely powerful entry at any time when you see that positive open and it's confirming a pattern. It proves to be a very high probability entry trade. Same scenario on Toll Brothers. Bullish flutter kickers setup. Notice they closed here, open here, closed here, gapped up above the previous day's open. When they opened up positive today and started trading positive, you could be buying it, not expecting this type of move. But this is the rationale of candlestick analysis. We know as far as the doji rule that if it opens positive, it's going to trade positive. and it puts us in positions where we know the probabilities are it's heading in the bullish direction. But additionally, you've got that benefit of being in a trade that could be a big move to the upside, essentially giving you a J-hook pattern that's starting off with a bullish flutter kicker. So right now, with the markets not knowing which way they want to go, at least we've got a playing field to work with that if they start trading or open positive tomorrow, at least you know you'll probably have a bullish day up till the T-line. So join us this Saturday. Members, it's $27. Non-members, it's $47. These scheduled 1 hour mini sessions usually last an hour and a half, but our mantra is that you're going to get a lot more information than what you pay for, and it gives you some valuable insights as to what happens in investor sentiment that creates extremely high probability trade entry levels. That'll be it. We'll see you in the chat rooms.